Hi, I'm Andrew Masters and I'm an analyst at FIBO Group. In this video, we'll talk about 3 pillars of trading, as well as touch upon management of capital as one of the trading principles. It is important to remember on what the Forex trading is based. These are the 3 basic components of trading: management of capital, trading system and psychology. Strange though it might sound for you, but the psychological is the basis for successful trade. It is the root cause of our failures and progress for those who use it. So what is management of capital? It is a way of decision making about which capital share one may risk at the particular trading opportunity. That is the methods of lot size choice for each transaction. Trading system is a set of rules that allow getting trading signals, and psychology is in charge of one's emotions in control in order to achieve maximal result. Let's consider the methods of capital management first. There are various methods of capital management, such as to capital management, yes. Yes is a method as well. This happens when the trader chooses a lot and a risk level in a random way and for no good reason. Method of fixed lot. Regardless of the assets and the distance, stop loss we enter with one lot size. This method is mostly used by the beginners. Method of fixed amount. Exposed to risk. Depending on the number of points to the stop loss, we calculate the lot size according to which the stop loss amount will not exceed the fixed amount. Method of fixed percent of the capital. It is similar to the method of the fixed amount, but the stop loss amount may not exceed the fixed percent of the capital. Martingale. This strategy implies bet doubling after each loss, so that if you win, then you'll get your bet plus 100% win. By doing so, you recoup all of your losses and you will also gain the first bet amount. Still, this method is tricky enough as you may run out of deposit amount earlier than the unprofitable deals are over. Anti-martingale. This is a trading strategy opposite of the martingale strategy. In the anti-martingale strategies, the bet is increased during the wing and in the case of the capital increase. You just have to choose the variant that is most suitable for you. In the next video lesson, we'll study the protective order and its kinds.